Hey guys, Scott here. I'm going to do the daily scan for the failed breakout system today. We're doing it in real time and it's 7:54 AM my time. Okay, so what do we have here? AUD CAD is going down on the daily, it's going down on the weekly, it's going down on the 240, it's going down on the 60. Now, this is enough for me, except for one thing. This 240-minute chart is just a little overextended from the moving average. So what this tells us is that either we're in the early stage of a strong move, and it's just so strong it hasn't painted a pullback. You can see we've got an attempted pullback on the 60-minute chart. This one could easily continue, so this is one that I'm going to put on my watch list. Now, if this was late in a move, and this is where the discretion of the system comes in. If this was late in a move, this would not be one that I would be considering. But you can see what we have here is an attempt to paint a floor. It's tried to go up for a couple of days, failed, and just fallen off the plate. This one has a high probability of continuation. So, how am I looking to play this? Honestly, this is not the greatest chart. This is when we look at this, I would prefer to see a strong bounce up to this line at least before reversing. Let's keep an eye on this one. This one is an example of one that looks appealing from a mechanical sense, but in the reality, this one's not a 65% trade. This is a 50-50 with a high with an outlier win if it works. Okay, so AUD CAD is on the radar, but it's not perfect. AUD CHF, the daily is up, but it's nothing. The weekly is down. The 60-minute is that looks like us. We can just chop out of that. AUD JPY. Again, it's going down on 2 out of the 5 time frames. That's not good enough. Let's move on. AUD NZD going down on the weekly but bouncing. Nothing on the daily. Up on the 240. Nah, this is not ideal. So when we're talking about a discretionary system, we're trying to use our discretion. So we're trying to use all our skill and all our wisdom and all our knowledge to pick only the best cherries. So what we're doing is being very specific about what is a nice looking trade and what isn't. Okay, so AUD USD down on the daily, which is the most important. It's tried to go up and completely reversed that. It's a little bit overextended from here, from the 8 moving average. The weekly is almost headed down. The 240 is down. The 60-minute is down but bouncing. This one is not terrible, not perfect, but again not terrible. So let's where is the appropriate place to place our support line? Probably there, and let's look at this before we decide whether we're going to get in. So not that clean on the 240. The 60-minute looks like a bounce. Again, this is a trade that I'll throw on my watch list, but honestly it's only a 6 out of 10 trade. This is not the droid that I'm looking for today. And we maintain this incredibly high win rate and this incredibly high expectancy by being very, very specific. Okay, so on the daily we are up. We broke and closed above here. This is a daily chart with a high probability of continuation. We have a steady and smooth 240-minute chart. I would have taken that hammer, for example, or on the 240. The 60-minute chart looks nice as well. We've missed it a little bit. This point here on the 60, either here or here, is the ideal place to take this trade. Let's see if we've got a re-entry on the 5. Okay, you can see what happened here. If we place, where is the best place to place a horizontal line? Nothing ideal, nothing perfect, but this seems about the best line of fit. So as the market makes a false breakdown and then recovers, there's going to be traders trapped wrong way who saw this very convincing down move and thought, oh wow, it's time to get short. So CAD CHF is a trade that I like. It's a strong mover. We place a stop loss about there, and we place a limit order at the green line. Okay, and what we're looking for is a move up past this to trigger some stops. CHF JPY. Okay, the daily is going down, the 240 is going down, the weekly is going down. Okay, this is a more interesting looking chart. The 60-minute. Now, this is very interesting. We're seeing the 60 congestion between these two lines, and that's about the point. The ideal trade is the 60 between these two lines and the 240 about on this first line, this 8 moving average. So now let's see what kind of pattern we have. Now what we're looking for is a very tight pattern. Now this obvious box thing is a very tight pattern indeed. So this one, in my opinion, is better than the previous one. So you can see we have previous breaks above the line here and here. So this is the entry point. We'd place a limit order to get in here. Where would our stop be? This stop is a little far away. 58 to 36 is it's just a little too far. A 22 pip stop. Yeah, it's not terrible. I would probably, because experience tells me that a 22 pip stop is too wide, I'd probably place it somewhere around here, about a 12 pip stop. Okay, so CHF JPY, I like adding that to the list. Okay, let's look at Euro Aussie. The weekly is heading up, but we have this shooting star candle. The daily is heading up. That looks quite good. The 240 minute is choppy, and the 60 minute is choppy. This is not an ideal trade. This is a bit early in the game, so you can see any time that that daily charts pull back into their moving averages zone, you get a little bit choppy, up, down, up, down, up, down, up, down. You know, around here we get a bit of up, down, up, down. So it's only when we start to diverge from the moving averages that we get consistent strings of up, 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 up. So here we don't, even though it looks at a glance that it's right, I would be wary of this one. This is one to stay away. Euro CAD is going down on the daily. The weekly is going up, so it's rolling over. The 240 is going down, and the 60-minute is going down. Now, this is quite an interesting pattern on the 60. But what's turning me off is this increase in volatility here. After we get an increase of volatility at the end of a move, you remember from our price action masterclass, we ought to be suspicious that the trend is ending. So it's quite likely that this one is going to drop down and then fake us out to here before reversing. So again, this is one where we use our intuition and our experience and our skill. Remember that discretionary systems are higher skill than other systems, and we just stand aside from that. So here we have Euro CHF. Okay, this is one that's either going to be a big win or a big nothing burger. So if it's going to hold support here and shoot up with this really high and tight pattern. We've got an increase in volatility at the end of a trend, which indicates that it could fall completely off the plate. The weekly is up. The 240 and the 60 are not up. So we don't have a reason to, we don't have a trade here according to our rules. So even though I really think that this could go a long, long way, we don't have a trade set up, so we have to skip it. So let's look at Euro Pound, and I can already see at a glance this really nice, tight, low volatility sideways price action here. This is appealing. Let's look at the other stuff. The daily is a mess. The weekly is a mess. No trade. Euro JPY, we have the 240 heading down. The daily is a mess, but that could fall off the plate. The weekly, a mess. 60-minute down, but not clean. No, that's one to steer side. Steer clear. Euro NZD, the weekly is up. The daily is up. 240 is just up. The 60 is just up. Okay, we have our requirements met. Let's have a look at where we are. I'm just going to put an ATR on the 5-minute. Okay, now you can see that we're moving down to a low volatility part of the tape. Now, tape nearly always starts to get interesting after a low volatility period. So where are we here? We're at the right spot on the 240. We're actually at the right spot in the 60s, so we're between the 8 and the 21 EMA. We're early stage on the weekly, and we've painted a pullback here. This is not bad. So we're looking for a horizontal line, and we're looking for a break below that line. Now, where is the best spot for us to place a horizontal line? Yeah, I'm not entirely convinced that there's a nice spot for a horizontal line. 1, 2, 3. We've met some requirements here. This is not ideal. It's a trade. Let's look at it again. Okay, we've got not a clean trend. We've got a breakout. Yeah, this could work. I do not like the 5-minute action. Should be a lot tighter than this. We have a lot of range in these movements, and we have no obvious place to place our line. That's probably a little better, but this one doesn't fit and that one doesn't fit. This is one that I'm probably going to steer clear of just because the 5-minute price action is a bit weird. So anything that you see that's a bit weird, you just want to get rid of. Okay, so here we have a failed attempt to drive the market up, down. We have a reversal of that. So we have the bulls given some encouragement, and the bulls are about to be faked out of their position. This is one that could run and run and run. So we are down on the daily, we are down on the 240, we are down on the 60. The weekly looks like it's falling off the plate. Now, let's look at how we would wish to trade this. So one way to trade it would be with the RTV sell here, stop here, entry here, in which case we'd already be in. So 120.78.5, and the high would be 121.39.5. That's a wide stop distance. That's one way to trade it. That's a low risk way to trade it. The other way to trade it is to drop back, and here we have something that is a little more to my liking. So let's zoom this up. Now you can see that we're in the low volatility time right here, and then we see an uptick in volatility and down. So this is a trade that I like. This is the break above the green line and the breakdown. This is where we want to be short. We want to be short here, and we want a stop just above here. Okay, so what's that? 96 to 81. That's about a 15 pip R value. So we're going to place an order to get short on a limit here. Okay. Okay, so Euro USD we're down as taking. GBP AUD is up on the weekly, up on the daily, but not really convincing after this 1, 2, 3. After a rule of thumb is after a lot of sideways, after about 20 sideways bars, you can't really rely on the old trend anymore. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. After 25 days of going sideways, this is a coin flip as to whether or not it goes up or down. So we can't really take into account this daily, and the 240 is down, the 60 is a mess. This is one to steer clear. So again, that was a situation where our reading of the price action saves us from a bad trade. So again, with discretionary systems, you're bringing all your knowledge, all your skill, all your power to bear. Okay, same thing, GBP CHF. We have a daily trend, but this is by no means clear. This could, because this is inside these moving averages. We'd prefer to see it out here. Okay, the weekly, we have two bearish candles on the weekly, even though the trend is up. The 240 and the 60, the 240 is down, the 60 is a mess. Steer clear of this one. So you can see how by this filtering process, we're just throwing away trades we don't like. Okay, the daily is becoming a mess. The weekly is up, but not looking convincing. The 60 and the 240 are down. No, we've got conflicting views. We just stand aside. Anything that you see that is a bit weird, you just don't like. Okay, so here we have this little hammer candle here. This puts me on alert that we're at least going to try and rally. The 240 is down. the daily is almost down, the weekly is up. No, this is conflicting views. We just want it to stand aside. So what we're trying to do is we're trying to pick only the very tastiest cherries. Anything that looks even a little bit weird, yeah, just fuck out of there, man. Okay, so NZDJPY. We are going down on the daily in the early stage of the trend. I love getting in on the early stage of a trend. Same with the weekly. The 240 looks okay. The 60 is in the right zone between this moving average and that moving average. This one is not bad. Let's look at the short-term price action. We have a low in volatility, and what we're looking for is a nice place to place a line, which is here, I think. Or here. Maybe. Let's see how that looks. One, two, three, four, five, six, 7 points of touch recently. This one is not bad. Let's look at it again to make sure. So early stage, we're outside the 8 moving average. This one is a little concerning because we would expect it to come up, hit this at least. You can see how we consistently hit around this zone. Now these moving averages don't particularly mean anything. They're just useful visual aids. They don't have any predictive capability whatsoever. So what this is telling me is that this market has quite a lot of ways to run. It could run all the way up to 77.10, which is somewhere up here. So we don't want to draw our line low. In this case, we want to use our intuition and wait for a break of this, and then that break to fail. So we'll put a line on that. Let's add NZDJPY to our list. NZDUSD. Daily looks okay. Weekly looks okay. 240 looks okay. 60-minute looks okay. We've got a nice shooting star there. We have now, where would you place the line here? It seems to me that we've got let's have a play around this and see if we can find a better place for the line. That's not it. That could be it. This is our low volatility time here, and we're spiking up. So no, that's not it. This is not ideal. I still think this is a decent trade. I would wait for a retracement to 70.36, place a stop a couple of pips above here, which is 70.43. So probably about 70.46-ish. Yeah, NZD USD. Okay. USD CAD. Up at early stage, nothing on the 240, nothing on the 60. It's heading down. No, because we have conflicting views, we went out of there. Okay. USD CHF, strong and smooth trend. daily. The weekly is almost up. We have some resistance up ahead. The 60-minute, we probably missed this trade. The time to enter was probably back around here. And the 240, okay, so we've probably missed this trade. If you wanted to take it, you'll put a limit order to get in here on the retest variation with a stop here. That would be a wide pip. That would be a wide stop, and you can see we haven't really got an ideal place to put a line. So we have no horizontal support that's being broken. We have a triangle-y type decreasing of volatility, which hits an extreme, and then a breakout. This one could work, but to me it's not ideal. I would steer clear of it on that basis only. And we've got one more, which is USD JPY, and 240 is up, daily is up, weekly is nothing, 60 is up. Okay, so let's look at the daily again to see what we think is going to happen. This could pull back more, this could keep going, this could do anything really. The 60 is in the right spot, the 240 is in the right spot. This one is acceptable. So this break of the line appears to be about right. Now, so we like this. We're adding this to our list. We're placing a little mark on the chart to cover it. And this is USD JPY. Now I want to bring you to something really interesting, which is the trades that we've marked. We have 1, 2, 3, 4, 5, 6, 7, 8 potential trades. We can't follow 8 potential trades. I can't keep 8 things in my head at once. I can't do 8 things well. So the other day we took 6 trades and all 6 were winners. That was actually an illusion, because any trade that you take at roughly the same time is going to be inherently correlated. So you can't take 6 trades, no matter how much you like them, no matter how perfect they are, because you're either going to get all 6 winners like we had the other day, or you're going to get all 6 losers. So yeah, I kind of misrepresented the other day by letting you think that, oh wow, you can get 6 winners in a day. You can't. So what you have to do is now apply the difficult process of going back and picking the best cherries out of 8 potential trades. So we're going to talk about this in the webinar on Wednesday at 7 p.m. Eastern Standard Time, USA time, on Wednesday, 2nd of May. Yeah, I'm looking forward to it, and you can see it all there. Okay, thanks guys.